All right, well, it's been a while since I've been able to have a chance to do a video. We've been busy with not only J-Person Asset Management, our managed funds trading live. This market's pretty wild. We're doing awesome. Took some heat in mid-February for being short, or we were short in virtue nature of being long SDS. And if you're one of our managed account clients, this is posted on YouTube, so you can feel free to make comments. Many of our clients were very gracious, had faith that we knew what we were doing. We explained it along the way in our live trading room as well as in our written weekly advisory service. And that has paid off. Right about now, what is the game plan? Well, the game plan currently is J-Person Asset Management account holders were flat. We're not short and we're not long. And what I'm looking for is confirmation and some type of decent follow through, and a couple things that I want to point out and take at least responsibility for my tweet that I sent out today that I said I see some bullish convergence. And many of you might be going, well, what the hell is this guy looking at? Because bullish convergence is when you look at an indicator and price moves up, but the indicator does not, or the price moves down in this case, and the indicator does not go down in correspondence with price. So let's talk a little bit about that, what I see in the market, and then we'll move on to look at a couple other trade opportunities and ideas that we've been looking at. I'm looking at the McClellan Oscillator. It's a breadth indicator, and you can clearly see that we have not, as the NASDAQ 100 stopped dead on a dime at Person's quarterly pivots right there. Now, I was kind of hoping we would go down just a tad more because there's a gap here in October that was pretty darn close to getting filled, and I'd love to see getting filled. Where's the bullish or positive convergence? Price at that point, the February 28th low, we took out and made a newer low. This looks like a love letter with X's and O's, sorry. You'll see that the McClellan Oscillator modified to reflect data of the NASDAQ 100. So, I might not be one that provides indicators for sale every day of the week or every new month. There isn't. I mean, I just have what I have because there's no reason to come up with something new, and there's no need to come up with something to improve. It works. First and foremost, we had some amazing indicator success, not just from the indicators you see here, but this is one that we use, the advanced decline for the NASDAQ 100. This is the on-balance volume, but we have a different tool we use, and I'll introduce that to you. I'm pretty sure this does not need introduction, but this is the McClellan Oscillator as I was talking about, and this is my volume indicator. And what this does is it's a momentum indicator of volume, not price. How many times have you folks seen people come out with brand new price-based indicators? I want an indicator that smooths out the condition of a move. Is there a volume flow? What's the percent change of that volume flow? Is the volume accumulation in terms of percentage change growing or declining? And that's what this indicator represents. There's another tool which we don't use here. It's the PMC indicator, and we use that for a different trade analysis on individual stocks to the S&P. We'll get to that in a minute. But as you can clearly see, as the NASDAQ was going up every single day, look where it stopped, dead on a dime at Person's quarterly pivot resistance. And under what was the condition? A bearish divergence on our modified McClellan Oscillator. Why is it modified? We changed the moving average structure a bit, A. B, we use this in conjunction with the data from the Qs. We don't use the McClellan Oscillator as it was designed originally by Sherman McClellan for the data off the NYSE. I'm not trading the NYSE, and you're not trading the NYSE. So why do we want to use data like the tick or the TRIN or the ARMS index, which is data derived from the NYSE, to get trade ideas on the Qs? It doesn't make sense. It's not logical. So with volume analysis as well, I want to know what's the change of the percent rate of the volume, and that's why we created this volume tool. All right. Now, what do we see? I tweeted today that there's a bullish convergence. Where and what are we talking about? The momentum of the volume was making a higher low, and the McClellan Oscillator was making a higher low, because in the same connect the dots price action here made newer lows. That's the setup. What's the trigger? If we can get the price action to start turning positive by mid-session, 130 is mid-session. 4-hour bar, 130. First off, I don't know how much more redemptions from 401k and mutual funds will come down the pike. Any unbilled orders from yesterday's close will be done on the open. They'll be dumping. I'm not sure if there's going to be any fiscal stimulus packages passed in Asia tonight. I'm doing this, it's 8:15. President Trump's had a press conference. The market seemed to like what he had to say. There's projecting to be maybe a potential tax cut coming out to stimulate or at least help offset any mitigating losses from coronavirus scare. Banks right now and a lot of major corporations are making employees work from home to test their own VPNs and their own internet-based products that so that in case something does happen, they're not caught off guard. So it's kind of like preparing like Y2K. A lot of corporations and big banks are doing this right now. Another interesting fact is if you look at the mortgage and try to refi today, you'll notice that 30-year fixed mortgages have gone up, not down, because the demand in the market to refi in the month of February was historic levels. Historic levels. Google it, fact check me, see if the media can talk to you about it. They won't, more than likely. The loan demand to do refis was off the charts, so banks had to raise rates on 30-year fixed to slow it down. Also, to lock in a loan, it's no longer 90 days, it's 120 days. This is unprecedented to keep up the pace of the demand. So if you think you want to take advantage of this market right now because yields went down, bond prices rallied, guess what? It's not translating to us, the consumer. So those are some things that I think are going to may also play a factor going forward in the whole economic scheme here in the U.S. So I want to stick more towards technology names and higher quality dividend paying stocks that have been beaten down. So when I take a look at the S&Ps, the NASDAQ does not have a lot of exposure to energy as much as the S&P 500 does. So let's take a look at the valuation and the indicators in the S&Ps. So it's hard to see this fuchsia color or this dark blue color. I'm going to change it to fuchsia, so we can see the McClellan Oscillator, and you'll notice it looks very similar to the SPOOs. We did not make a new indicator lower reading. My volume indicator, the momentum, is starting to show upward bias, meaning the sell-off was on little to or lower volume changes, right? And the advanced decline, by the way, while it did move lower, it didn't have a monstrous breakdown. You can only see there's 490 stocks negative and 8 positive. It's going to take at least 2 to 3 days if we see a turn for the AD line to turn positive. But the McClellan Oscillator could bounce and form a bullish convergence. The last bullish convergence pattern that we had being this oversold was, we have to go, and this oversold. This line here represents, as I will share with you one more time so you know I'm not cherry picking things, this is now the new line level. We got to move it down. Excuse me, try to move it down here. And come on, move. We're on a time scale. People don't want to listen to this for another minute or two. Anyway, just trust me, I'm having a hard time moving the darn thing here. I can't grab it like I want to. All right, we fixed it. So this is a beautiful thing. This is amazing. This is very powerful. This is just beautiful. We have not been this oversold and then have a dead cat bounce and form a bullish convergence off of a level line reading of that magnitude and that's the point I was trying to share with you and go back through history since over here in December of 2018. That's number one. But even then, we had just had a V bottom. It rocketed. We didn't have a bullish convergence. Like, for example, we had one over here during October where the market made a low and then made a sharply lower low and then rocketed. This had a bullish convergence pattern, right? So we have not had a market from a pattern perspective this oversold, forming a bullish convergence in a long time. So that to me is interesting, especially, by the way, with the momentum of the volume. The momentum of the volume is leading. So while prices went down in December of 2018, the momentum was weakening day by day by day. It was just a matter of when you got the market to move. So I'm not interested in selling this low. That's why I'm interested in poor man covered calls and select stocks. And that's what I tweeted out, as well as sent an email to our subscribers. That's the nature of the game. The PMC indicator, as I was referencing a few minutes ago, this is TradeStation's radar screen. To be equal and partial, what is the PMC reading? So let's take a look, and I'll maximize this cell. This is Walgreen Boots Alliance. Notice what we have. And this is the charts from our live trading room. This is what we go over. I scan for stocks. I look for relative strength readings and stocks that are either bearish divergence patterns to sell short, or to get short the market or liquidate longs, and bullish convergence patterns on stocks that are starting to look appealing. And to me, the market relative to the overall market, boy, this is a weekly chart. And now let's take a look at a daily chart. Now before we do that, let me just point out to you, the price is lower and the reading is higher. There's a convergence. The price is lower, and even the on-balance volume is kind of showing a bullish convergence. So indicator basis, this tells me Walgreens pays a dividend. It's got a lower PE than it did 2 weeks ago, but it's still not as low. It didn't get slammed because no one was really in it that much, right? So I'm looking at Walgreens to outperform going forward. Therefore, we're looking at a wide vertical spread. A wide meaning not just the 2 strikes, but maybe 3 strikes, 4 strikes, a 10 wide, a 7 wide, something of that nature between the call that you buy and the call that you sell, with lots of time, because implied volatility is at historic levels right now. And so what we do is we're offsetting the cost of an at-the-money option by selling a further deep out of the money option because they're overinflated, and taking in that premium helps pay for and finance the long call. So we're able to use a little bit more efficiency with our capital in this environment by doing poor man call spreads. Poor man stock replacement, it's considered to be, because instead of buying at the money, we could get a little more aggressive and go in the money, but because we're buying a lot of time, like 190 days, September expiration, stuff like that, that's what we're trying to live through, all right? To get through this quarter, next quarter, and in the middle of summer, let's face it, flu season will be long gone and coronavirus will be a thing of the past. And then we're left with what happened to the stock market. So let's take a look at a daily chart real quick and look at the readings here. I mean, this is a bullish convergence pattern to biblical proportions. I'm not talking New Testament, I'm talking Old Testament. This is like big time. With the relative strength reading, market plunged and made newer lows. The relative strength, it was outperforming. And now we've got a PPS buy. And Walgreens, if the market starts to see some recovery, you're going to want to be in a 50, possibly 50 to 57.5 or 60 strike call is where, think about it. Do you think the market might be able to get to 60 where it was just January 7th between now and mid-July? That's the question. And I think the answer is, at least if we have an option, if this is the worst it can do in the worst of the market, what happens to the market recovery? I mean, could the stock go down? Sure, it could. But, I mean, in the worst of the market, if this stock is going up, when the overall market and people start to pour money back, this might be one that goes up. So that's one trade out there that we were looking at. TWTR. Now, I'm not a big fan of Twitter when it was up near these highs because of the fact that the volume readings, and would rather share that with you with my personal indicator package that we have on TradeStation. Let's look at TWTR. You'll see why in a second. Let's take a look at the daily chart and here. So this is one of the points that I would like to make. If we format analysis technique, I'm going to get the on-balance volume into range here because it doesn't scale every time we change a chart. Here we go, and hit all right, and then close. All right. So let me ask you a question. Here's an earnings the market pops, and here's a secondary high, and everyone loved Twitter. You think back, you might be in it in your own portfolio because everyone loved it, but we didn't. Volume looked pretty good, but my histogram made a lower low, and my volume indicator was bearish divergence. So the volume trend indicator, and that's what this is, the volume trend indicator was divergent. There wasn't any volume in there. But now what do I think of the market? Higher high readings in volume momentum, higher high readings in price histogram. This is the histogram, that's the volume. And the relative strength is still outperforming relative to the overall market. So I think if you're looking at anything, buying an at the money call and selling an out of the money call, we'll be able to play this for the next in through July. So I think Twitter might be one that could survive this whole mess. Now, this doesn't pay a dividend, by the way. It has a high PE, number 2. So this is more like a gamble trade, and it's not in the category that I was mentioning earlier about going with high dividend yielding stocks. But there are others that we're doing for our advisory service and our investors. But I just felt that I owed it to you guys who have been following me on YouTube for a while. I haven't had any posts because literally I've been busy trading my fund, and clients and fund management comes first, and I know you'll appreciate that. You're always welcome and invited to come and give us a spin in our live trading room, where you will see our trade platform and our algorithms trade automatically. With that said, last, I think I could just kind of share this with you. This is an interesting trade strategy, that we have going, and you can clearly see the S&Ps where it just how wild the market is. It's trailing stop. In lower ATR environment, it works fine. In higher ATR environments, it's making money, but it's gotten stopped out, which I'm kind of glad, because at this point it's flat coming into tomorrow with a potential bullish convergence in my volume indicator. So we'll see what happens next. Anyway, I thought I'd like to share that with you. This is a pretty good the strategy. Let's double check something here. Here we go. Here's a performance graph. This goes back since 2015. This is a 60-minute chart. Let's take a look at the performance here. Again, this is almost a 2-to-1 ratio, 1.9, 1.4. It's only taken 600 trades up, down, sideways. Performance, as I say, can always do better, but this had a period of flattening for a while and has just accelerated and made another new equity high. So these are the kind of strategies that we utilize to help identify risks as well as identify signals. So again, if a system is short, right, and you say it can't go any lower, why don't you look to at least don't get long the market until the short covers, and then if you want to go long, fine. So right now the system is flat, so if we generate a buy in bullish convergence, it might be good for a possible recovery trade, is what I would suspect. And I'm not sure if it's going up to 310 or 300, but with bullish convergence, if we turn positive, anything's possible. At least my guess to re-challenge 300, the point of breakdown there, 299. So thank you very much for watching, and we'll try to update things in the videos as we can and time permits. Thanks, everybody.